Hey, welcome to the Explainer. Today, we're going to break down India's latest union budget. And let me tell you, it's way more than just a plan for the next year. It's really a blueprint for the country's entire journey to 2047. So, let's dive in and see what's inside.
But before we get into all the nitty-gritty, let's just take a step back for a second. When you hear the term union budget, what does that actually mean for a country with, over 1 billion people?
Honestly, the easiest way to think about it is like a household budget, just on a massive scale. It's a super detailed plan laying out where all the government's money is coming from, mostly taxes, of course, and then where all that money is going to go.
Right, so this budget isn't just about some short-term fixes for the next 12 months. No, it's all built around this huge, long-term vision they're calling Viksit Bharat, which literally translates to Developed India. And the big target year? 2047, which will mark 100 years of India's independence. This whole vision is basically built on 3 core duties, or what they call kartavyas. First up, kick the economic engine into high gear and make sure that growth keeps going. Then, it's all about empowering every single citizen to be a part of that journey. And finally, making sure that this progress is truly inclusive, that it reaches every corner of the country.
And the finance minister has been one thing crystal clear. A massive piece of this entire plan relies on empowering the country's youth. They have a name for it, Yuva Shakti, which means youth power. And believe me, this is a theme that we're going to see pop up again and again.
Okay, let's get to the part everyone's really waiting for. What does this mean for your money? What's the deal with taxes and trade?
So, for most of us, when it comes to income tax, the big headline is, well, there isn't a huge headline, things are pretty stable. The tax slabs under what's called the new tax regime, which is now the default option for most people, are staying exactly the same. That means if your income is up to 4 lakh rupees, you still pay 0 income tax.
Now, one little detail you'll want to remember is the standard deduction. It's still higher at 75,000 rupees if you're in that new default system. And that's really one of the main incentives to get taxpayers to switch over, since that new regime doesn't have a lot of the other deductions the old one had.
Okay, so here's where things get interesting. A real head-scratcher. With no major shocks on the income tax front, you'd probably expect the stock market to have a pretty calm day, right? But that is not what happened at all. So what spooked the traders?
To figure this out, we need to talk about something called the Securities Transaction Tax, or STT for short. It's this tiny little tax that gets applied every time you buy or sell things like stocks or derivatives on an exchange.
And this is the answer to our puzzle. The STT on what's called futures trading was more than doubled. It jumped from 0.02% all the way to 0.05%. Now that sounds tiny, I know, but for the big-time traders making thousands of these transactions every single day, it instantly makes it more expensive to do business, and that's what the market reacted to.
But hey, it wasn't all about taxes going up. On the flip side, customs duties on imported goods were actually cut for a bunch of key items. So this makes things like certain life-saving drugs cheaper, and it also gives a nice boost to domestic manufacturing by lowering the cost of raw materials for big industries like batteries and solar panels.
All right, let's zoom out from our wallets and look at the bigger picture, nation building. This budget is laying out some truly massive investments that are designed to completely reshape India's future.
And when I say massive, I mean staggering. The government is putting 12.2 lakh crore rupees, that's well over 140 billion US dollars, into something called capital expenditure, or CapEx. This is the money that goes directly into building real, long-term assets. We're talking roads, railways, ports, the works.
So take a look at this. It gives you a pretty clear idea of where a chunk of that money is headed. 7 brand new high-speed rail corridors are in the works. You should think of these less as train lines and more as economic arteries, designed to connect the country's biggest hubs and just fundamentally change how people and products get around.
And it's not just about physical infrastructure, like steel and concrete. They're also placing some huge bets on the industries of the future. There's a 10,000 crore rupee fund called Biopharma Shakti that's all about making India a global powerhouse for producing advanced medicines.
And this is all part of a much bigger strategy, right? It's about boosting domestic manufacturing, but the focus isn't just on making things in India for the sake of it. It's about creating jobs, especially in sectors like textiles, that can employ that huge youth population we talked about earlier.
Now, here's something that really caught my eye. This focus on a totally modern, creative sector. They're calling the orange economy. You might know it as the creator economy. We're talking about really high-growth industries like animation, gaming, visual effects, all of it fueled by young, creative talent.
So how do you fuel that creative fire? Well, the budget is putting money directly into Yuva Shakti. This means setting up labs for animation and content creation in thousands of schools, totally revamping the national sports mission, and even making sure there's a safe hostel for girls in every single district so they can pursue higher education.
So, with all this incredible spending on everything from railways to the creator economy, you gotta ask the question, right? How is the country actually gonna pay for all of this?
Well, the government's aiming for a fiscal deficit of 4.3% of GDP. Basically, just think of this as the country's annual shortfall. It's the gap between what it spends and what it earns. The big goal here is to keep shrinking that gap over time.
Now check this out, because this is the really surprising part. Even with all this record-breaking spending on infrastructure, the total national debt as a piece of the whole economy is actually projected to shrink a little bit. So how on earth is that possible?
Well, it all comes down to this really careful balancing act. The government is essentially making a bet. They're betting that by spending big on these assets that fuel future growth, like those rail corridors, the economy itself will grow even faster than the debt does. And at the same time, they're tightening the belt in other areas to keep the nation's finances in check. So, at the end of the day, you've got this roadmap laid out. Big dreams, huge spending, but also some very careful accounting. The vision is incredibly ambitious, and the numbers are just massive. So the final question for all of us is this. Do you think this blend of big spending and financial discipline is really the right formula to transform India into a developed nation by 2047?
अगर आपको ये वीडियो पसंद आया हो और आज कुछ नया समझने को मिला हो, तो एक छोटा सा लाइक ज़रूर कर दीजिए। ऐसे ही आसान और एग्जाम ओरिएंटेड वीडियोस के लिए चैनल को सब्सक्राइब करें और इस वीडियो को अपने दोस्तों के साथ शेयर करें। कमेंट में बताइए आपको सबसे इंटरेस्टिंग टॉपिक कौन सा लगा।